Hello my fellow freedom builders and welcome back to the channel. As you might have noticed lately, I have been doing some videos about mining and especially gold mining. And the first video I made was all about what we should look for in the mining sector, all the risks and so on, the possibilities. And then I made a video about some of the majors. And if you recall, in the mining business there are majors and there are juniors. The majors are the big, well-producing mines that are like an oil company or something like that, where you are pretty certain about the entire operation. Whereas the juniors, as I mentioned in my videos, are often projects that are not yet developed or not really producing. But what we're going to look at today is actually, it's called a junior, as far as I can tell, but it is a very stable and well-producing mine. And I'm a bit annoyed because I actually had it in my view in my focus back in late April, but I didn't really pull the trigger, so that of course is my own fault. But it's called Caledonia Mining Corporation, and I must admit that I'm a bit intrigued, and I think I will be buying a bit of it, and now you can judge for yourself. As I'm going to show you in a while, it's a very small market cap company. So right now I have something about 4,000 subscribers on this channel. If I had 100,000 or a million subscribers, I might not actually mention a stock like this, because just mentioning it on a large channel would be able to move the price quite significantly. So the reason why you hear about it is that I am still a quite small channel, and that my judgment is that this will not be able really to move the price. But of course, if a million investors all of a sudden jump into a small, a low market cap stock, then it can really move stuff. So let's have a look at the Caledonia Mining Corporation. First of all, let's have a look here at the price chart. Sorry about a little alert there. About this price chart, we can see that Caledonia Mining, just since June last year, have gone from around $6 and has more than tripled in value. And of course, the normal approach here would say, well, then it has become too expensive. But if you have been following me, you know that my approach is that I am a trend follower. I want good, solid companies, but I also want trends. And right now we are in a trend, and we are actually getting some quite okay buy signals. But I'll get back to the price later. This is just to show you that, yeah, well, you could almost mistake it for some EV hype stock right now, but this is actually a gold mine. If you're looking at just quickly the fundamentals first, and then I'll dive deeper into the company. I'm looking at Stockopedia here, and let me make this a bit smaller if I can. Here we go. As you can see in Stockopedia, and as you know if you followed me, they have these rankings that are the quick filter to tell me is this a usable stock for my portfolio. And as you can see, quality 79, we like that to be above 70. Value, I'm not looking too much at that, but it's actually quite high here. Momentum is great at 99, and overall stock rank 94, meaning that it is outperforming 94% of all the stock they are looking at. We can also see that, well, it is actually a US and British-based company. Until recently, it was actually called a Canadian company, but they did a voluntary delisting from the Canadian Stock Exchange. As far as I can tell, it was something about saving on cost, and there were some currency issues, etc., and some different tax rules that made them delist from the Canadian Stock Exchange. The funny thing is, actually, if we are looking at the price here, that as far as I can tell, the delisting happened. I think it was this day. They fell heavily in price on the delisting, almost like people didn't really know what it was, and then it shot up in price again. I saw some analysts saying that this was the best buying opportunity in years on this stock, and it turned out it has almost doubled since. So that is that is worth a thought. But as you can see, if we dive down here, they have a PE ratio of a forward PE ratio at only 5.8, which is actually quite great. I'll get back to all the risks and all the operations, but for a income producing company here, 5.8 in PE is actually great, and the PEG ratio, that is the current PE divided by the expected growth in earnings, we like that to be below 2, and this is 0.6, so it is great. They're also paying out a dividend. I'll get back to that because that's actually a bit of a special sight here on these small mining operations. But it shows that it is a very stable operation, even though it is a bit small. We can see here the market cap is only 180 million euro, around a couple of $100 million. So that is one of the minuses here because we cannot dump unlimited money into it. We can see that their return on capital and equity and operating margins are extremely good. We can see it compared to the overall market, and we can see it compared to the industry. Caledonia is actually second out of 145 companies in the metals and mining market. On the return on equity, they're number 6 out of 140. And in the operating margin here, they are 4th out of 88. I'm not certain why these numbers are 88 and 140, why they're different. You should think that the industry was the same number of stocks. I'm not sure about that, but they are in a very good spot here. The Petrosky score, if you've seen my video on that, is 8 out of 9. Amazing. For a small mining company like this to have an Altman C score, which is measuring the bankruptcy risk, have that up in the green zone here, that is also not often seen here. Earnings per share growth has been in 2019, it went up quite a lot, and it is a bit chubby right now, and I'll get back to that later why that is. We can see that their operating cash flow is very, very good. Then they've had some quite large capex, and I'll also explain that in a second. But they have been developing their mine quite a lot, and that has been expensive on this account, meaning that the free cash flow has gone a bit into the negative, but they are actually rising very steeply right now. As I mentioned, they're paying a quarterly dividend, and that is actually going up right now. They just started to raise it. And it's not that they're paying out every single dollar they are earning. They are around 150, 160 in dividend yield, but it is going up and is projected to go up even further. And as you can see, the dividend cover is extremely high. It was at 3, but right now it is going up to somewhere between 10 and 15, meaning that their earnings per share can easily pay off the dividend. And in this sort of business, this is very important that they're not, if they're paying out dividend, that they're not paying out too much, because as I mentioned in my first mining video, this industry is, you have an asset, and from day one you are making it worth less and less because you're digging the gold or the silver or the copper or whatever out of the ground, so that your reserves are getting smaller and smaller. So you will need some capital to buy or to develop new projects. So it is very important that they have a good cash flow, and they do have that, so that they can develop new mines or buy up some existing mines. You can see they have great cash, working capital, net debt here, great, and yeah, they're not really any of the numbers here that are at least somewhat scary. The analysts, only 4 of course, but they are saying somewhere between buy and strong buy. So yes, nothing really here that scares me away. This looks good, although it is small, but that is how it is. I'll also just give you a quick look at the Guru Focus here. Guru Focus is one of the sites I'm also using to get some of the fundamental data here. I'm usually looking at if there are some severe signs that I should be looking for. One of them here are asset growth faster than revenue growth, and that is temporary, I can tell you, because they have been developing their assets right now, their minings and so on. But as you can see, there are a lot of good signs. Revenue per share, consistent growth, operating margin is expanding, interest coverage is comfortable, and so on and so forth. So there is absolutely nothing really on the value side. A little thing here you could say on the Guru Focus is that they have this star system, and it's actually not something I'm really using that much, but it tells you that if you have 2 stars, then and this is purely statistical over many stocks, then on average gain this would make 6% per year. We cannot really use that for that much, and this is how many of the stocks are still in loss if held over 10 years, 16%. We cannot really use it for that much. However, what I am seeing here is that normally when I'm looking at these mining stocks, especially a very small company, also outside mining, we can see that they are almost never getting any stars because they're simply not solid enough. But these are actually solid enough to get some stars in the Guru Focus. I would not use this percentage for anything. It is not really anything to be worth your while looking at. But just in this junior mining example here, it is actually quite extraordinary that they're getting 2 stars. All right, let's have a look at the company, because of course that is important. Also at the risk. We have here Caledonia Mining, and this is their latest investor material from June 2020. I also have a lot of links for you. I'll link them below the video here. There are some very good interviews with their director of board and their CEO and so on, where they're explaining about the potential of the company. Always keep in mind that when they are getting interviewed, they are salesmen. They are trying to get investors into the business. But I think they have some very good answers, and they also have some good perspectives on the risk of the trade. So they are not overly salesy here. They actually have a very realistic view on the matter here. So this is a company overview, building a solid foundation. We're talking about a new development of a new shaft, a mining shaft, which is actually very exciting. And they are, as it states here, they are located in Zimbabwe. Caledonia Mining are owning 64% of a mine in Zimbabwe called Blanket Mine. The reason why they are only owning 64% is that the government in Zimbabwe is owning 16%. So here we have the 80%. And then Caledonia Mining are doing it in a way, and they will be doing that in the future, they say at least, that they are giving shares or selling them cheaply, once to the local community and then to the workers. They are giving shares of the company, 10% of the shares to the workers and 10% to the local community. And I think this is because it is based in a bit of a, you could say, an unstable or uncertain part of the world in Zimbabwe here. And I think they have good experience with having the local community, the government and the workers as co-owners, because that gives you some more some motivation to show a bit more initiative here. And know that Caledonian have been trying to buy the 16% back from the Zimbabwean government, but they have not succeeded yet. They have tried for several years. As you might well know, Zimbabwe lost their long-term leader, Mugabe, not so long ago. And as far as I can tell, I've been looking a bit into it, there are some decent political terms, and that is the risk part we're going back to. There are some decent political terms in Zimbabwe right now. But of course, there is a political risk, a geopolitical risk as well. There are a lot of countries right now interested in entering Africa. There are China, there are Russia that are really working hard to get some huge influence in Africa. So it is a bit of an explosive area. But right now, I'm not really sensing that this is the biggest risk here. But let's go through the material. As you can see here, profitable gold producer. That itself is actually very nice for a junior mining company, that they are profitable. Right now, PE of 6.8. This is, you could say, old numbers. They are actually better now. They are what you would call their normal production is 55,000 ounces, which of course is not amazing compared to the millions and millions of ounces produced by some of the majors. But what is very, very nice is that they are using their money right now to develop a new shaft, and that will bring them up very realistically to around 80,000 ounces per year. That is one positive thing. The other you can see here, because this AISC stands for all-in sustaining cost, and that is the average cost in dollars for digging up 1 ounce of gold, and all included. And as you can see, they have been lying around 800 to 856. I actually think they were up at 940 a bit earlier. But now they have been doing a lot of modernization and so on, and they actually have put that down to somewhere around $700 to $800 per ounce. They are estimating themselves, I think it is $753 per ounce. So if we compare that, let's just have a quick look at the graph here, because that of course is also a reason why many of the miners are going up. Here is the gold price. And that is going up quite a lot. So as long as this is going up, the mining sector is just doing better and better all over. But of course, as I mentioned in my first video, when you're buying a mine, you're not just buying the gold price, you're also buying the management quality, the area quality, the risk, and so on and so forth. And right now you can say that this price, combined with the qualities of the Caledonian mining, gives this a very, very nice upside. As you can see, quarterly dividends, annualized yield, and so on. The revenues are going up, and that is of course partially due to the gold price, but it is going up, and it is because they're running quite a nice business here. You can see the gold production over the last 3 to 4 years have been fairly stable. Operating cash flow has been going up quite a lot. However, as you can see, capital investments have been high, and this because of last 5 to 6 years they have been putting money into this development of the mine. They bought the mine from Kinross, one of the large players. I think it was in 2012, some 8 years ago, and they got quite a nice price, I actually think, and they have been developing the mine ever since. There are some news here. I'll link to this entire presentation below. You can go through many of the details that I skip over here. So here we can see the revenues, the EBITDA, profit after taxes, and so on, and that is going up, and that is of course also one of the reasons why this is going up. Now what they have compared to down here is the GDXJ, and that is the gold mining ETF for the juniors. That's why the J. We can just have a look at that here. GDXJ. Here, VanEck Vectors ETF. And that has also gone up quite a lot this year, but they have actually done better at the Caledonian here. So that is quite nice. Now here comes some of the really interesting stuff, some of the meat when you're looking at mines, because you want to know what are their reserves, what are their potentials, how much do they have in ground. And what we can see here is that the lower part here is what is proven, meaning that is where they have both geological tests. They have been some trial digging, they are down there. They can see that the gold is there, and as you can see in the beginning here, that was up around 250, 260, and then it has dropped. But with the new developments, these are only the 2018 numbers, so these numbers are going to go up quite a lot in the new numbers here due to the new shaft they are making. But as you can see, there are also some probables here, and that has been going up from 113 and upwards here, and that is something where they cannot say it with 100% certainty, but it is very probable that they have around 250,000 ounces buried here. So just from the proven and the probable, they have just below 400,000 ounces in ground in reserves, and digging up here from next year again, 70 to 80,000 ounces per year. That at least gives you 5 years of production just from this. Then there is the indicated, and they of course have statistics as to how many percentages of these are often there, and then there are inferred, and I'll show you that on a map in a second. But all of this together, if all of it were there, they would have somewhere around 1.8 million ounces in ground, enough for digging for the next 20 years. So of course all of this will not be there, but there is a good indication that a lot of it will be. We have some dividends here. I'll not look too much into that, but just saying, as I mentioned before, that the dividend is very, very secured as to the dividend cover here. And I saw some interviews with the management team, and they said that their plan was to keep raising dividends, definitely raising dividends. I'll show you in a second why. But it would never be raised to the goal is only to raise it to a level where they will make sure never to have to go back again to lower the dividends. So they are very focused on keeping the dividends levels they have, and only raising the dividends when they are next to 100% certain that they can keep this dividend in the future as well. Now here we come to the very exciting part, I think, and that is something called the central shaft. And let's have a look at it, because the central shaft is what Caledonia Mining have been spending a lot of their money on for the last years here. It is a very large shaft, at least compared to the other shafts they have, sinking completely in July 2019, currently shaft equipping, and we can see it here. And I know this might be a bit of a confusing picture if you haven't looked at mining pictures before. But what we can see here is the green line. You should imagine, let me just draw here, that this is this is the surface of the ground, and these are shafts digging down into the ground. And as we can see down here, we have proven areas, probable, indicated, inferred, and so on. And we also have stopped out areas. So all of the gray areas here are where they cannot really find any new material. Then we have the red areas around here. These are proven. The blue ones are probable. Down here, there's a lot down here. And then we can see when we get down to yellow and this turquoise with indicated and inferred, that is some deeper levels down here, but they have some very good geological research showing that there will be a lot down here. There's actually also a lot up here. So there is some very interesting areas here. But what we can see here is that the green shaft is the infrastructure that was there when they bought the mine from Kinross some years ago. And what they have been spending all the money on, not all the money, but a lot of the money on, is this central shaft, really, really deep down here, with some sites going out here so that they can get into digging in these areas where they are pretty certain that there is a lot of gold located. So this is bringing their yearly production up, they assume, or they're pretty certain of, from around 55,000 ounces to 80,000 ounces, giving them a lot of extra cash flow. And when they're closing down the development of this central shaft, because it has been finished, then all of the money, all of the capital expenditures they're spending here will of course turn into free cash flow, which makes this stock very exciting. There are some pictures from the mine here, and here is what I'm talking about. What you can see here, let me see if I can scroll so you can see all of it. Here we can see the cash flow coming into the company and the capital expenditures. meaning that what they actually have had in free cash flow is the difference between the cash flow and the capital expenditures. So they have been having this little area as free cash flow. And as you can see here, cash flow forecast, this is from 18 and forward. You can see here that what will be happening here, they expect, and they are pretty certain it will happen, is that they are getting a very good boost in their revenue, in their cash flow right now. And then their expenditures will be going down because they're finishing off the development of this new central shaft. They will still be spending money on development, and they should, because as I said, they are depleting their mines. All mining companies are. They're looking at potentially buying some new mines in other places in Zimbabwe, and they are also looking at extracting some other materials from the area they actually own right now. But as you can see, the free cash flow is growing massively here, and that is one of the reasons why they are suggesting that the dividend might go up. Now, this of course seems to drop, but that is only because that there are a lot of uncertainties in mining, and this will definitely be larger because they will have a lot of they'll put a lot of the free cash flow into developing new stuff. So this is only because that they are showing, you can see here with the little asterisks here, cash flow forecasts only include only production from M&I resources as per national instruments. Management anticipates supplementing production from inferred resources as these resources are delineated with further exploration work. So this is only what they are 100% certain of they can take out of the ground right now. And in this, they are not including all of the areas where they're not 100% certain. So this is a picture of that. They are talking about some of the areas where they are located down here in South Zimbabwe. And they are looking at some other areas where they might even acquire a mine or develop some new opportunities. You can read all about this. There's something called the brownfield projects here. And there's some talking about it here. They're talking a bit about the Zimbabwean government, the entire situation, because that is, of course, a risk there. And yeah, you can read about, they are pretty much telling you how they are working out of Zimbabwe. Now, the risk, when you ask them, there are pretty much 3 risks that they are looking at right now. And first of all, actually a risk that I normally haven't seen when I investigate mines in not Africa or not Russia. If you're looking at mines in United States or Europe, or at least some of the southern South America part, is that there's quite a high electricity risk, meaning that the status of the electricity production in Zimbabwe is actually quite unstable. So there might occur some electricity fallouts, and that is one of the things that they are looking into spending their free cash flow on. That is actually building a huge solar power area. They are located in Zimbabwe, so they have just about the best solar situation in the world. So they're looking at simply developing their own electricity production. They are not very far in this, in the considerations yet, but as far as I can tell from the interviews, they can actually look at some very large savings in if they don't have to buy the electricity themselves. So they'll get kind of a twofold here. They'll get a good return on their investments, because instead of having to pay the electricity bill, they're producing their own electricity, and then they'll get a more stable electricity inflow, so they don't have to have breaks in the productions due to missing electricity. So I think that would be a very nice way to go here, actually. Another risk is, of course, this virus spreading all over the world still. They have not been extremely affected about it, but there have been a bit, and the virus is in Africa, it is in Zimbabwe, but I have seen some of the interviews with the management team, and they have actually done a lot to make sure that the workers are working in a way where they will not be very much affected by this virus. So I think that is great. And then of course there is the political risk and the geopolitical risk, and investing in a company in Zimbabwe is definitely something where this risk should be considered. Now, Zimbabwe is very, very dependent on the metal production. They are in lack of foreign capital, and this is one of the reasons, one of the ways they're getting it. So from gold, silver, and so on, and also from a lot of tobacco production in Zimbabwe, that is where they're getting their foreign capital, the foreign currency. So they are dependent on this, and if they were to make it more difficult for the minings to produce gold, then it would hurt the country quite badly. But then again, you never know, and you can never be 100% certain. So this was just a quick overlook of the entire mine, of the company. And as I said, there are several things here. There are the perspectives for the future. There are the earnings. When I look at the different analysts talking about it, they are saying, many of them at least, that the future upcoming earnings here are not at all priced in yet. Now, you know that I'm a technical analyst, so what I will do is that I'll keep track of the price. Right now, it's actually showing a very good buy signal here, and I could consider entering the stock actually very soon, and then of course control my risk. I'll not put a huge stake into this because, as you can see here, there is quite a large drop down. If I would have to wait for it to establish itself under a 20 SMA, that would be somewhat like 25-30% down my stop loss would be, meaning, because I can easily do that, but that just means that I will be buying a very small portion of these stocks if I buy it. I suspect I will. And that means that I know exactly how much my risk will be if all of a sudden they turn down. But as I see this, if you buy stocks in the Caledonia Mining Corp, it's not some Nikola EV kind of hype stock. This is actually a bit of a longer term investment. And I think that buying this stock should be something where you're looking at least 3, 4, 5 years out into the future. So I keep track of it, and I must admit it is one of the most exciting kind of junior mining stocks. I would say that they are moving from the junior mining and upwards because they're actually making money. They're not just a pie in the sky fantasy dream of some CEO. It is a very robust, very solid company making money, paying dividends, all you want to see. The only thing is that they are a bit small and they have a very hard exposure on one geographical location in the world. But make your own research, make up your own mind. You should never look just to me for investment advice. I'm not an investment advisor, so do your own research and make your own decision always. That's all for now. Take care of yourself and your money out there. If you haven't done already, remember to subscribe and like. Talk to you again soon. Bye for now.